All right, good morning, everyone. I think I got it right this time. Okay, so yes, I have a microphone and it's working and it's recording. So today I'm starting off with the 10-year yield. Here you can see that today it's bouncing up really close to the high end of its range. It'll be a good opportunity to start averaging into a short position, or I should say long bonds, short rates. Probably spend the next probably 2 weeks averaging into a long bond position here. The junk, the high yields, the stuff that moves the most is worth trading the most. Definitely an opportunity here in the coming weeks. Next up, the SPX. Past couple of days on the S&P 500 have been pretty tough. Pre-market right now, it's looking like it's going to open up with quite a significant bounce higher here. So yesterday, let's see, this is the mini, and yesterday it closed at 4168, and now this morning it's opening up roughly 73 points higher at the open. This looks like it's trying to find a bottom, at least short term. This little thing right here might end up being, a short term bottom. If we get a rally, back up to 43. Well, the top of the risk range here is 44 or 41. Wait a second, that's not right. 43.21. Oh, I didn't change it on the E-minis here. Let me change it on the E-minis. So the top end of the range here is 43.21. 4321. So if it reaches that high, I will be selling like mad, shorting like crazy if it gets that high. I doubt it'll actually go that high. Actually, while I'm at it, let me put the low down here too. Expecting to see, this is a near-term low. So within the next, say, well, actually went and visited that yesterday. Okay, all right. Then we have the NDX. The NDX is just always kind of at the top end of its risk range, and the bottom of the risk range keeps getting lower and lower. Let's see what it's doing right now. Let me adjust these levels here real quick. Let's see, 13,609. Yeah, so we are right at. So it looks like tech is a good short today too. So bonds are a good long, and tech is a good short. Tech has just been the brunt of the shorts, and I mean, it's just kind of like, it's the way it goes, All right, VIX. So the VIX is pulling back a bit. The range here, the high end of the range is 37.98, and the low end of the range is 28.24. Ouch. The VIX is definitely elevated. If the VIX actually comes down to 28.24, I'll be shorting everything under the sun. The dollar's kind of in the middle of its range right here. So this pullback, that'll be good for another sort of catalyst for gold to go higher. Is the dollar is falling as well as rates falling. So rates getting to the top end of the range, and dollars still rising while rates are doing that. The dollar and gold is still rising while rates made this run up here in the past. That's 5 days from 171 to 190, and gold is still going through the roof. Then there was a pullback actually yesterday. I haven't been paying too much attention in gold. Well, as soon as rates start to fall again and the dollar starts to fall again in strength, gold is going to be skyrocketing. I'd say this will play out for, who knows, could be 1 or 2 days or something, but then gold is going to start heading right back higher. This is really probably just an opportunity to buy here. Let's see, gold risk range, 2040 to 1901. So I updated these risk ranges right here. If it goes all the way, I seriously doubt it's going to go all the way back to 1901. But as it gets closer and closer, like halfway, let's say it gets to 1976, I'll definitely take a starter position, and then halfway. I mean, if it keeps going down like that, I'll just keep buying more on its way down until it decides to launch forward again, which it's going to do. Okay, and then let's go to Amazon here. Yeah, Amazon, it's getting a bounce off this bottom. It broke this technical support level down here, broke this technical level. I shouldn't say it's support. Just broke this level yesterday and then popped back above it again. So this low that was put back in here in January was broken yesterday, and it popped back above and closed above it. And so now this morning it's looking to bounce. And so after everything, hits the low, so Amazon, you can see here, this is the low end of its range, this blue line right here. And just things have a tendency, to hit these low levels and then, look for, some buying. Some people are covering shorts, whatever it is, so it looks like we're going to see a bounce here. I think it's temporary. Although the top end of the risk range is here at $300 or $3,010, I'd be really surprised to see Amazon make it back above this 2,896 level, or roughly 2,900 level. Let's see. Yeah, between 289.96 or 28.96 and 29.21 right here. I'd be really surprised to see Amazon recover and hold those levels. If they do, I think it'll be very temporary. Consumer discretionary, and even consumer staples to some degree, is in a lot of trouble. The consumer altogether, whether it's staples or discretionary, are in a lot of trouble, and that puts Amazon in a lot of trouble. Tesla's interesting. It's still bearish. Once the sort of the bears get into the equity markets, everything suffers, regardless of how well positioned any company is to benefit from changing tides in the economic forces. It's really quite obvious. If it's not obvious to anybody, I'm really quite shocked that you wouldn't know it. And that is that this administration it currently is consumed with ideologues on the Green New Deal side of life, who are willing to sacrifice your energy costs for their idealism, for their idealism, for their ideas, for their ideology. There we go. That's what I was trying to say. So anything that can push the price of oil, whether that is, a method of free market forces, whether it's the free market that's pushing the price of oil higher, or some outside force, the government, the Joe Biden administration, not renewing leases and actually cutting off, or it's just the energy. This administration's energy policy, you could almost call it anti-American. I mean, it's really it is very anti-American, really. So all that has happened is that our oil demand is now getting pushed to the Saudis, to Iran and Venezuela. Unfucking believable. Unfucking believable. We have approached Iran and Venezuela for our energy needs. This administration is just... look, oil prices are high, and they're going to stay high, even if they correct a little bit today. And they are definitely correcting today. Let's see, there was a close at $85, and now they're down to $79. This is the U.S. oil fund. And by the way, if there's any oil fund to be bearish right now, it's USO. I mean, this is the U.S. oil fund. This isn't like, an Exxon or, anything like the rest of the world's energy policy is steady, not the U.S. though. So, all right. Let's go over the things that I'll trade here. So these are all kind of the futures, the broader, these are the larger markets, except for Amazon, Tesla, and USO. The rest of these things are somewhat just sort of indicators, although, I'd trade their derivatives. So here's the SPY. SPY's catching a bid this morning. Let's see, yesterday's high. Let's put yesterday's high. So, let's see, yesterday's high was at 427.21, and here we are challenging, in the pre-market, we're challenging yesterday's high. I've got this resistance line here. Let me move this line back to where it was. So the top end, let me explain the line I have here. So this big green candle, let me get volume out of the way so it's a little bit easier to see. This big green candle right here, that is a bottom candle if I've ever seen one, right? Short-term bottom candle. If I've ever seen a bottom candle, it opened and did nothing but go up. It gapped down, and a huge gap down, a huge lower open, and then did nothing but for the rest of the day but go up, and then had two confirmation, actually one confirmation day after that. So in the short-term respect, until there was a close inside the top of this candle, and until we started getting a daily close, it was inside the top of this candle. There's nothing that basically you had to be either not trading or looking for bullish setups after this candle right here. Well, here we go on the 7th of March here. Was that Monday? Yeah, that was Monday. Yeah, on Monday, not only did it close into this candle, but it took a gigantic dip into this candle. Now, the next thing to look for is a break. I'll call it 410.64 right here. A break below 410.64 is going to be the start of the next leg down. So right now, what the market is attempting to do is the bulls are attempting to get the SPY, or this corresponds to the S&P 500, to essentially close above this closing price here that happened on the 24th. That's what bulls do. I don't think it's going to happen, and also not for the time being. Eventually it will. Eventually, this bear market will go away. All the corrections will happen. All the bad investments will get chased out of the market. Everything that's got to happen will happen, and we'll be on our way back up again. But for the time being, it's bearish. Now, also you'll see this red trend line right here. Let me go to the monthly. You can see here where I got this bearish line here on the monthly. Actually, I wonder if we move it. I don't know. I'll just keep it where it is. I could move that. But yeah, so essentially, this is the downtrend. That's the trend line for the downtrend. And if we can get a close above that on a daily basis, even, then I think we'll see a rather significant break to the upside. But that's not something that I want to anticipate, and it'll be really obvious when that happens. When we get a break to the upside, and there will be a break to the upside, even if it is a temporary sort of reprieve in the bear market, we will get a break to the upside, and it will send a lot of the bears out of the market. A lot of the shorts will get chased out of the market. It's going to happen, and it could happen anytime. It could be today. It could be. I doubt it. But it could be. So, here's, for me, I'm perfectly willing to take risk at this line right here, at this trend line right here, for a short opportunity. To see it fail, hit this resistance line and then fail. But the first place I'll do that, actually, the first thing that I'll be looking for a short is 428.76. If the SPY starts hitting 428.76, I'll be looking for at least a short-term trade after it hits that and bounces away. And then if it doesn't work out, then I'll limit my risk on it. Thank you, Jeff. I'll limit my risk on that trade. Jump out and wait for the break and quick retest of this downward trend line and look for a quick trade there. I don't like the breakout on descending trend lines. I really have found that that's only worth a short-term trade. And then basically everything else after that is going to be pretty much the same thing. So here we have the VIX. VIX is coming off the top end of the range. So a down move in the VIX here could be bullish for the day. And we really could see, actually that breakout could happen sooner rather than later. Again, I think it's going to be very temporary. If it breaks out, it's going to be just a shakeout to get, people who are short, get them out of the market, chase away the weak hands. So then the Qs, basically the same thing with the Qs. We're seeing the same pre-market bounce there. And Tesla is an interesting one. There's a lot going on here in this chart in Tesla with its risk range as well as sort of this downward wedge that it's now putting in. You can see here, this is downward wedge, and it's looking to me like Tesla could go a lot further down. Its P&E has pulled back recently. Let's see, price to earnings is at $164.44. Or I'm sorry, its price to earnings is 164 roughly. And in the automotive industry, that is an extremely high price to earnings. Now, Tesla is quite a unique company and extremely innovative, a leader. And so if there's anybody in the electric vehicle market that deserves and will probably live up to a forward PE of 164, it's Tesla. There are some people that don't like that. Apparently, Joe Biden, every time Joe Biden goes to an electric vehicle conference, he praises Ford and Chevy's forward stance on electric vehicles and talks up Ford and Chevy big time and never mentions Tesla, which is the damnedest thing. I mean, the guy's American. Maybe you don't like Elon Musk because he's an independent thinker. He doesn't toe the Democratic line, or I don't know what's going on with Tesla and the UAW. I don't know how I don't know if the UAW is at all involved with Tesla or not, but gee whiz, give credit where credit's due. Stockholders or stock investors are definitely doing that with Tesla. Although I think there's more pain in the future for Tesla, tech, any equity. Tesla's, I still really like Tesla. I love the company, but the stock, I think it's just a matter of time until it gets its next leg down. All right. Amazon, like I was talking about with the consumer discretionary and consumer staples are going to be under pressure. Rough times, rough seas ahead, no doubt. Bitcoin, what an interesting thing. Look at Bitcoin. What an interesting chart we have here. So we could be setting up, for a big head and shoulders right here on Bitcoin. But I don't know. As of right now, Bitcoin is doing the best it can to get back to neutral. I have neutral as a close and confirmation, and probably let's call it a monthly basis, because on the daily basis you can see it's doing nothing of the sort on the daily basis. The daily basis it's bumping right around this 42,000 area, but Bitcoin is doing everything it can to get to neutral. And this is my neutral zone. This is my bullish zone. This green zone right here is the bullish zone. Yellow is the neutral zone, and red is the bearish zone. And Bitcoin. This is the monthly chart on Bitcoin, and we'll see. We'll see what happens here. There is a possibility that this thing, though, is putting in let's do the weekly. There's a possibility that this thing is going to put in a head and shoulders pattern, an even larger head and shoulders pattern that's already been put in place. Here's the left shoulder, here's the head, and if we get a right shoulder over here, if a right shoulder comes in that it stays lower than 64,895 and then starts to come back down and breaks this neckline, watch the hell out. Watch out. Bitcoin will be heading much, much lower. If we get a break above and a hold above, I don't know, 66,000. I don't know what the all-time high is here, but if it closes and blows out this left shoulder, then there's likely going to be a pullback there, but it's going to be a bull run, and Bitcoin is taking off to who knows, 100, 200, 250, 500,000, who knows. All right. The dollar, the dollar's pulling back here a bit. That ought to help a little bit of a relief rally, dead cat bounce, whatever you want to call it for the broader markets. USO oil's coming down here. Probably a good opportunity to be counter trend for a quick trade. I'm looking, if I'm buying, I'm going to buy at 76.20 on USO. And yeah. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session.